Hey everyone, welcome to the Channel Investor channel. In today's video, we're going to look at 6 stocks given that the market has reversed and I'm expecting the markets to head higher. And for that reason, I'm going to cover 6 stocks which are from different categories. Now, one stock has given a 9-year breakout, 2 stocks from the F&O space. So if you're interested in futures and options, you can check out these 2 stocks. One stock related to the railway space and 2 stocks which have reversed from a major trend line. These are the 6 stocks I'm going to discuss today. I'm sure excited. I'm also excited because markets have reversed and hopefully we'll have a good run going forward. So let's start with the Nifty outlook as always. I'm also going to cover Bank Nifty and the small cap index today because the markets have reversed. I just want to show you why I am so bullish and we might probably head higher as well, right? So starting with Nifty outlook here. So Nifty, actually last week I mentioned that this is a major support zone. We kind of went below that zone and we kind of came back again and closed the week very well. So overall for me, this zone still remains a very solid support zone. And I expect Nifty to head towards 18,100 levels, which is this zone over here. And if we cross above the 18,130 levels, then probably we're going to see a good long-term uptrend again. And we might see a good rally in the markets this year. But remember, we need to cross this zone and that is very, very important. If we do not cross that, there's a chance we might consolidate some more time and that might cause a lot of investors actually might be frustrated because of that. So that's the Nifty outlook. Bank Nifty also has a similar setup, but Bank Nifty was a very good child and it kind of respected that zone over there and it reversed again. So Bank Nifty is again in a long downtrend, but for Bank Nifty to resume a long-term uptrend again, 42,000 is the zone that we have to cross, which is this horizontal support zone. So this is a kind of rectangle pattern. So I'm expecting once we cross the zone over here, then probably we might head higher. Okay, so that's from a Bank Nifty perspective. And finally, the small cap, which is the most important index for us, because small cap, if rallies, we also make money because most of our stocks are small caps or mid cap stocks. So small cap is still consolidating in this range, but we saw a sharp undercut. And again, we've reversed and we formed a good weekly candle here. And this consolidation is still going on. In order to break out of this consolidation, we have to break out above 9,100 levels. And above 10,200 odd levels. And only then we can see a good rally in many of the stocks. But remember, markets are always going to give you opportunities. And we are going to discuss 6 stocks today. And I'm going to show you why they are looking good from my perspective. Okay, so let's get started. So the first stock today I want to discuss is Wonderla. Now, Wonderla has given a 9-year breakout on the charts, but also fundamentally also is looking good. So I'm going to discuss the fundamentals of Wonderla here. And if you see here, since 2011, the stock, the company actually has been kind of posting decent revenues year on year. But this year, something has changed. I mean, look at that trailing 12 months, 386 crores, and we've gone up, had a very strong jump. And also the operating margin is a very good 48%. So last time we had such good operating margins was back in 2012. And we are again seeing that kind of a margin repetition. Now, this is probably because of the money, disposable income that India has now. A lot of people have and are kind of using this money to go to amusement parks and spend their money. So that's probably reflecting here. And this is a very strong story for me. And I don't think amusement park as a growth story will not end anytime soon. So I'm expecting the company to do well going forward. And also it might do very well in the next 3 to 5 years. Okay, so having said that, the monthly charts look excellent from a technical perspective. And if you look here, we've had this beautiful horizontal resistance over here. Now that's a 9-year breakout. We came and reversed here 5 months back. But now again, this month, we're trying to cross that level and we're trying to head higher. Now, whatever it is, I think if we don't come back and break below the zone over here, below the levels of 300, I think Wonderla has an excellent opportunity to outperform in the next many years. It could be a multi-bagger, 2x, 3x returns probably in the next 3-5 years. It is a long-term story, and I think Wonderla is a very good company as well overall. So that's from a technical perspective on the monthly charts. Remember, rate of strength has finally started to outperform, which means this stock is outperforming the overall markets for the first time in almost 10 years, right? And CCA also is looking very bullish. Volumes have been brilliant. We had this beautiful consolidation before we had a breakout and we are heading higher again. So that's from monthly charts. Taking a closer look into the weekly charts, we had this 1-year consolidation breakout. And again, we had this 5-6 month consolidation. And now we are heading higher with amazing volumes. So overall, I think Wonderla is an excellent bet for your core portfolio. You can buy it at current market price, which is around 450 levels. Keep a stop loss of around 390 or around 13%. Now, if you want to take an aggressive bet, you can also go to the hourly charts, keep a stop and trade accordingly. But I'm looking for targets of 750, which is almost 5 times the risk that we're taking here. So that's the first bet. Do let me know what you think about the fundamentals of Wonderla, because I personally feel it's going to be an excellent bet for the next 3 to 5 years. Okay, so that's the first stock today. Second stock we're going to discuss today is Team Lease. Now, Team Lease also is an excellent company. It is in the staff sourcing area, and fundamentally also this company looks excellent. So this company also has grown its sales from 6,800 crores to almost 7,600 crores. That's a 10x jump in sales in the last 10 years. And also the profits have gone up from almost negative to almost 120 crores. Now that's a huge, massive jump in the overall fundamentals. It's a very low margin business, around 2% is what we are seeing here. Now, I'm not sure if this can head higher, but definitely low margin business. So they are playing the game of volumes. So the more number of people they outsource, I think probably that's going to help the company more. Okay, so that's the fundamentals. Taking with the technicals, now this is a beautiful textbook channel. Now, why do I say it's a beautiful textbook channel? Because we had this move up, we had a correction, we had a move up, again we have corrected. Now, if I connect these points, now this is a perfect reversal on the monthly chart over here. Now that is what I call a primary trend line support. Now primary trend line support is nothing but when you connect these points here, and if the third time if it reverses, that's a primary trend line. So I'm connecting the key low points over here to join the primary trend line support. And if I extend that to this point over here, you see it is beautifully rejected from the channel resistance over here. So this is a textbook channel play for me, and this is also probably long-term growth story given that the price is trending like this. Right now, there's a chance we might head lower, but for now, last 4 months has been a strong price consolidation, and I don't expect the price to break down and go below. Also remember, in November 2022, we had this huge candle over here with huge volumes, and after this, there was no follow through whatsoever in spite of the market being very weak. Now that shows the strength that we are having in the stock, and I think we are heading higher in Team Lease, and it can really probably head towards up end of the channel in the next 5 years or so, 3 to 5 years or so. Now, I don't want to be very aggressive and tell you that this price targets can achieve in the next 1 year. I want to keep it conservative, always have less expectations, and your life will be good. Okay, so moving on to the weekly chart here, if you see, we are still in a strong downtrend. Now, that's the downtrend I'm looking at here. Still in a strong downtrend, and we are now consolidating with some massive volumes here. So I think this consolidation should get over soon, and we might head higher and break about this trend line. Now, remember, until this trend line breaks, do not go very bullish, but you can take a good position size with the stop loss here, and once it goes over this point, that's when we confirm the stock is now entering a long-term uptrend and the stock might do well. So having said that, the stock can be bought at current market price with a stop loss of around 15%. Now, if you consider that's too much, so basically stop loss is around here, but you can also keep a tight stop loss around the weekly lows over here. Right now, that's up to you. I'm going to look for targets of, I'm sorry, the number here is incorrect, but I'm going to look targets of around 4,400 levels, which is the previous high, and above that, the stock can even head higher. Okay, so that's the second stock from a fundamental plus technical perspective. Do let me know what you think. I'm sure both these companies, you already have heard about it because they're fundamentally very good, and it's a good portfolio bet as well. So next 4 stocks, I'm just going to discuss the technicals because the fundamentals are pretty clear in these stocks, and I think you also might know these. India Cements is a FNO stock. It's a mid-cap stock, and I think has finally bottomed out. Now remember, cement stocks have not been doing well since the last 2 years. Since its highs, the stocks have been consolidating for the last 6 to 8 months, and some stocks have been consolidating since almost July 2021. Now, a lot of cement caps, small cap stocks are doing good. Do check out my Twitter. I have posted this Sunday morning a few stocks from cement space, but do check out a few stocks. At least Streetig Vijay Cement is a very good company, I feel, and the stock is doing well. So that's from a small cap stock perspective. But here we're going to discuss this from a technical perspective. Here, the price has reversed from again a primary trend line here, and the price also is trading in a beautiful channel. Okay, so zooming to the weekly charts, it's in a strong downtrend right now, and I think we might head higher soon. So we are forming a 5-week consolidation here. Again, a beautiful long-term, a beautiful strong red candle followed by 5 strong candles here. Now I want the price to cross above this zone here and break out above this channel here, and once you break this out, then we're going to probably head higher. So you can buy the stock at current market price, which is around 200 odd levels. Keep a stop loss of just 9.5%, right? And you're going to buy this for targets of 255-60 levels, which is the previous zone over here. Now we can also head to the previous zone over here, but I'm just being conservative. But if it crosses here, do not sell it off immediately. Try to hold and see what the price behavior is, and then take a call whether you want to buy or sell. So that's the third stock. Fourth stock is NBCC. Now, this is a public a company held by the government of India, Navratna CPSE. But from a technical perspective, this is going to be the stock for the day because I feel this has a huge upside potential. Remember, after the COVID crash, it had a kind of breakout there, but then it started going sideways. We also corrected, and if you see, this is a major resistance zone. Now, the stock reversed here, and then again it reversed here, and again it reversed again here. Now, remember, the markets have been weak, and if this stock was really weak, it would have corrected further, but rather it's forming a higher high, higher low. And a stock which is forming a higher high, higher low on the weekly charts is definitely a good candidate when the overall market breadth is not great and when the overall market is correcting or going sideways. Now, for me, for that reason, this week's candle looks excellent with some good volumes over here. So overall, I am expecting the stock to head higher from here with a stop loss around that zone, which is around a stop loss of around 32 or 10% odd, right? And we're going to look for targets of 53, which is that zone over there, 53 or so, right? We can also head much higher if we break out this zone. Then we're going to enter a very long-term uptrend. Remember, NBCC has not done well for over a decade, so this can be a good investment candidate. If you want to ride trends, then you might actually make some good gain. Now, remember, if the small cap index breaks out, these are stocks which will perform because these are stocks just showing good relative strength and might do well going forward. Okay, so that's the fourth stock. The fifth stock is from the railway space, which is RITES Limited. Now, RITES gave a massive breakout somewhere in October 2022. We had a massive rally, but it corrected all the way now, and now it's consolidating in a very tight range. Now, remember, this is a breakout from 2020. We had a strong base formation here, and we kind of had a strong breakout, and now we are consolidating again. Now, this is an excellent opportunity. If you missed RITES before, it's an excellent opportunity to add this to your portfolio because fundamentally, this is a beautiful company, and I think given the entire focus on the railway space from the government, this company can definitely benefit. Okay, so don't forget to add this to portfolio. And here, if you see this week, we had a strong close after almost 8-9 months of consolidation. 8-9 weeks of consolidation. This is a weekly chart, not monthly chart, and we might finally head higher, right? So retest is one of the best ways to buy stocks. I did a video last week on how to buy a breakout retest. This is a perfect example of a breakout retest, and we might head higher again. So you can buy the stock at current market price. Keep a stop loss of 11%. We're going to look for targets of 430 rupees, which is the previous highs over here. Now, remember, if you break those highs, then we can eventually head higher. So from an investor perspective, definitely try to ride the trend. Do not sell off just because these targets are met. Okay, targets are just to guide you how to find targets, but eventually riding trends is where you make the biggest money. That's the fifth stock. The last stock for the day is IndiaMart. IndiaMart is an excellent fundamental company. It posted beautiful numbers in the last couple of years. Margins have contracted because of the stock started falling from this point, right? So we had a 45 consolidation, then we had a 45-week consolidation, and we had a breakdown, and the stock then started going sideways. Now remember, after this massive weekly candle over here, the stock kind of is making a rounding bottom, and I think we might head higher given the breakout has happened this week. Also, we had this nice resistance crossed as well. So overall, I think IndiaMart has made a major bottom, and we might head higher for good returns. And the stock, you can buy at current market price, and we're looking for targets of 6,600. Now, of all the stocks, this stock has the least risk, which is just 5.5%, which means a target of 6,600 rupees is 6 times the risk that you're taking. So if you invest 100 rupees, if you're taking risk as 100 rupees, you'll make 600 rupees as reward. And that's the kind of risk reward we're looking at today in this stock. Now, that's the last stock for today, and I'm sure you loved all the 6 stocks. Now, don't forget to share this video with your friends, and don't forget to subscribe to my channel and like this video as well. And I'm going to leave you here. I hope you enjoyed today's analysis. I'll see you in another video. Until then, take care, stay safe, and trade safe. Bye-bye.